Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a trade that was done by Franz. And I don't even know how to pronounce this, Franz. How would you pronounce this?
Well, Roman, I don't know how to pronounce it either, but let's call it HUAY.
Oh, yeah. Okay. All right. So here's a monthly chart. So what did you see here, Franz, before the trade was initiated?
Okay, well, first of all, just a little bit of background. I'm a can slimmer, so I'm looking for stocks that have certain fundamental characteristics, which I won't go into, but HUAY has those characteristics, and it's been on my watch list for quite some time. So this is the kind of the history of the stock on a monthly chart. It came out as an IPO back in May of 2018, had a very strong initial run in the market, and then ran into supply and went into a kind of an extended trading range, which we can see here, that had been lasting for just about 2 years. So very nice cause have been built, all the characteristics that I'm looking for, and we can see, so I'm doing kind of an analog comparison of the so as you teach us to do, as we're trying to evaluate the bias of a stock to make the determination. So I'm comparing, first of all, the initial sell-off out of the IPO top. I've got that rated as number one. And then the second, I didn't really use that as a comparison. This kind of the whole middle phase B that we're looking at there. I just figured, well, maybe that's number two, maybe not. So yeah, okay. So, but the third kind of reaction off of the out of the supply area, which is that red rectangle, out of the sort of resistance of the trading range that this thing has been in. It has, I mean, if you look at the amount of volume, and if you look at the actual bars, you can see that there's just no comparison between 1, for example, and 3. There's just the spread's a lot narrower. The distance traveled is a lot narrower, a lot smaller, and it just looks like effort versus result, which I made the comment to myself down there. Down effort is increasing, but downward result is decreasing. So that's telling you something. Obviously, it's telling you that supply is just not having the ability to move price lower. So I'm looking at this and the stock's on my watch list, and I'm thinking, well, I should take a stab at it. So,
all right. Well, first of all, I think that you're onto something extremely good. I just want to bring a little bit more clarity to what you're saying. So why don't we do this, guys? And this is a really good exercise. I mean, I hope that you're watching this episode. I hope that the name of the stock did not spook you not to watch this episode. But if you're watching, obviously, then, kudos to you. So how about this? We're going to talk about supply and demand at 2 spots, at the resistance and at the support. And what we're going to do is we're going to compare in the analog way as to what is happening, what kind of effort do we have and what kind of result do we have in both cases, at the resistance and at the support, for the supply and for the demand. Okay, so hopefully this is not confusing as I'm trying to clarify this a little bit. But we're going to start with Franz's initial assumption about the availability of the supply or selling at the levels of the resistance. So obviously the first time when supply came in strongly was here on these 2 bars. So this is an immensely strong supply, and this is underwriters selling their positions. They're done with this trade. They made tons of money and they're going away. So that supply needs to be observed, and that supply still produces relatively strong move to the downside with big spread, increased momentum signature, and increased downward spread. Please note that supply starts to diminish here, and then when the spread starts to diminish and volume slightly increases, that shows presence of the demand, and therefore rally starts to happen. The second time when supply starts to emerge significantly happens at the same zone, and these two bars are showing us supply signature. But there is something dramatically different about this second time. Look at the spread compared to the previous instance, number one, and look at the first downward spread and compare it to the first downward spread that we see. So what do you see here? Obviously, diminishing supply characteristics. So the result is diminishing to the downside, and effort is diminishing at the same time. So now we know that we're in the process of absorption, but there is still some time for us, to go through this and absorb everything that needs to be absorbed at that higher level. So next time we approach the same level, same thing happens, right? So we have the last bar to the upside that starts to diminish in spread relative to the previous bar or bars, and maybe only ever slightly increase in the volume signature that suggests that yes, there is some supply increase, but it's not that significant. So what does it mean to us? And then look at the second bar, by the way. Let's just finish this thought. So right away, supply diminishes so much, and the spread itself is also diminishes relative to the previous two instances. So that's the process of absorption at the higher level. That just tells us that at this level now, if the price is going to come here after the reaction, then there's going to be not just stopping action, but continuation to the upside at this point, as we're seeing how supply has been diminished so much. Now, let's pick up a different color and let's talk about support, and let's talk about demand at the bottom. So the first time, and perhaps I'm gonna do this. So the first time we're seeing how demand emerges, but it's not that strong. It still has capacity to stop the price from moving further down, and that produces this rally. Then the second time we're seeing as we go down, demand is actually starting to increase. And one might ask a question, well, why would you say that this is demand? Isn't it supply? But look at how we are stopping in this whole area. And we have clearly a stopping action, an automatic response, secondary test, spring, and then the test of that spring. And what happens on those downward bars is that they show some demand characteristics. This is where price tries to go down and stops. Price to goes down and then recovers really quickly. And even on the test, in the test area and on the first bar to the upside, we still see relatively high volume signature, which still suggests some buying. So in this buying much more than here. So now combine those two ideas together, right? So diminishing supply at the resistance and increased demand at the support. Accumulation or distribution? Obviously accumulation. Well, as we go up and we still encounter some supply, which is so much less than in the previous instances, then we just want to see, well, what about demand? Would it produce a better result right now than on the previous two attempts? And it does. High or low. And look at the how demand is increasing. And Franz is absolutely correct that demand is present here, but it really diminishes the result characteristics. Look at the spread. Look at the where everything stops here at around 1/2 of the height of the trading range, and the last bar just don't have any selling. So it's very important to assess the trading range like this so that it would give us an understanding of, first of all, the bias itself, accumulation or distribution. Secondly, timing. Are we ready to move out of the trading range now? And this is one of my mistakes. I'm usually coming in somewhere in phase B, somewhere here. And then also the character. because as we're seeing how supply has diminished here, we're thinking that there's going to be a free pathway for the price to go through this level. And, this move should be, on the increased momentum. And if we have especially increasing demand signature, that would drive the price really up. So I would be thinking maybe establishing here the position that would be more of like options leverage position with an idea that the target is going to be somewhere here around $50. So let's see how Franz handled the entry point. So this is daily chart. So Franz, please walk us through your entry.
Okay. As we went through this on a daily chart, this very kind of between July and October, this sort of a distribution substructure, we come down and looking at on October the 12th, there's a lot of supply that pushes us out of this, sort of short-term trading range down into another trading range substructure. So at the beginning of December, with the decline in volume that you're pointing out there, it seemed like this was a place for phase C. And you can see my entry there on December the 8th.
Wow. This
was
is insane. This entry. I love it. So you're entering basically a day after the actual low. All right. So what happens next?
And I set my stop loss at 16, which is, given this trade plenty of room to work. I'm a long-term trader. I'm not looking at this as a swing. I'm looking at this as a campaign. I'm thinking, I want to give plenty of opportunity for this to move around, even if I'm getting in phase B. This isn't phase C that I'm still, given this, and it's a probe position.
So the stop loss is just slightly below 16. What was the logic for this particular stop loss?
If we go across to the previous kind of area where demand came in, you can see it was the move out of that substructure started at right about 16. So I'm thinking if that level of demand gets broken, then I'm just completely wrong.
Okay. Well, first of all, let me just praise you. So entry, unbelievably perfect, and you know how much I love the perfection. So, I mean, to me, this is like, if I would have this type of entries, and sometimes occasionally I do. So we need to bow to this type of execution. So I'm bowing to this trade. I'm bowing to this point of the entry. And I really like the idea of the stop loss because, and France's time frame is, very long. So it's appropriate to have, especially on the initial probe, a more conservative stop loss and be more aggressive with stop losses as the price moves up into more speculative stages. So yes, okay. Then,
well, this is where we come. This is where we jump off the rails.
Okay.
So we get a bit of a rally from my position, and then we get this sort of ease of movement, selling bar. And I'm looking down below and I'm looking at the relative strength, which is that first horizontal. The relative strength is heading down. There's no momentum. And instead of following my rules, and I have a rule that says if the price is not behaving in a way that it should, that I'm allowed to sell. So I sort of reached into my bag and pulled that stop loss rule or that selling rule out and sold on that down bar at a slight profit.
All right. Okay, well, let's look at this from different perspectives. First of all, let's just deal with kind of like the things that we need to get out of our way, and then we'll go into structure and tape rating. Relative strength. It has been in the downtrend. So even though it has this small tick down, it's still a higher low, and it's still in the major downtrend. And because we're still in the major trading range, we're probably not going to have the relative strength going up until actually the price will start moving up into one half of the trading range and then above it, right? So that's number one. Secondly, in terms of the momentum, momentum also is going to increase only when the price will start moving up, not necessarily when we have like a bar like this. So I would use this analog right here, thinking that this trading range resolved with the momentum increasing on the upside when the price started to move above certain highs and break out above them. So that's that. So I would say that maybe this was more of a confusion rather than a proper usage. Now, going into the structure, um, subtleties, nuances about the structure. So look how the up move concludes. It is an upsloping structure. So usually that tells you something about the leadership characteristics. That's number one. Secondly, we have this break, which signifies a lot of supply, and then after that, we have shortening of the thrust, very significant shortening of the thrust. And this is the lowest low. So you have to allow the price to create at least the first high low. And Franz, I wonder if you could make this as a rule. You know, um, exit after the first higher low is broken, something like this. I mean, like if it breaks to the downside here, then that's understandable. But allow the price to create the first higher low in anticipation that it might continue to the upside. Or another rule could be that enter after the first higher low. And that would maybe signify a much better entry. Although I love this entry. Um, thirdly or fourthly, um, when we look at the supply characteristics, and especially on this bar, I mean, what is the intention of this bar? The intention of this bar is actually to overcome this support and to commit to the downside. At least at the minimum, if you want to go into a much smaller picture, you might be thinking, okay, this is the support. In both cases, result has diminished by intentionality of that bar. And on the background of what? Supply has increased slightly on the previous bar and then diminished significantly compared to, let's say, this moves down. So even though we might say, well, ease of movement, but ease of movement usually have what? Has the commitment on the
Yes.
directionality. And where do we have the commitment? Do we commit below this area? No. Do we commit above, below, ever more important, this support area? And no. So we have diminished effort and diminished result on that bar. And the mistake is looks bearish, acts bullish.
Yes. Yes, it does.
Okay. And then also I want to talk about one more point. Uh, I'm definitely seeing a lot of improvement, Franz, in the way how you analyze the chart. That's number one, and then how you starting to execute this type of trades. Uh, I would say, with that in mind, and knowing that it's gonna take some time to transition from, let's say, the previous type of execution and analysis to the new qualitative uh, level. Allow yourself to still be in these positions and be correct, meaning that maybe close one half of the position and allow one half to unfold with the logic that you've established originally, because sometimes original thought is the best thought that we have, and then we sabotage ourselves. I do this a lot with myself as well. Like, I'll go back into my analysis and I'm like, oh, wow, a month ago or at the beginning of the year, that was the best thought. And then during the year, I kind of, deviated from that thought. So I think that's what also was happening here with this position. I would just have it as a rule, just get one half out because you're feeling emotional disturbance. You don't want to be having a loss. You don't want to be wrong if it goes down. But that influences you, and that sabotages the previous analysis and decision and execution that you had. So if you would exit only one half of the position, that would allow you to stay in. Okay, well, let's see what happens next. And this is a weekly chart. So we are from monthly to daily to weekly. This is the time frame. So the point of entry was where, Franz?
In December. So early
right,
December.
right here, right?
Yeah. Well, December the 8th was the entry and December the 22nd was the exit. So,
okay, so I think the entry is somewhere here, right?
Yeah.
Okay, and then we still have a slightly lower low, but your stop loss at $16 would not be hit. Imagine if you would still have one half of the position and then you see action like this. Then you could add back
Sure.
to that position one half and actually more. Once you see a confirmation of this structure unfolding, you could add significantly more. Okay, so then as the price goes up, again, one of the most important spots for us are going to be this, right? This is where the price tried to overcome this high before. So it comes, there is some supply, but there is definitely less of the reaction here. So result to the downside is diminishing, and then boom, we have this big momentum move up. And obviously, we were thinking about the targets higher, so these targets could still be reached at some point. So we would have to come back to this, but
we certainly have the cause to do that.
Yeah, absolutely. And I would say that course suggests overcoming 50.
I think so too.
All right. Well, let's go through the post analysis. So bias, definitely yes.
Yeah.
Timing, absolutely yes. Character, I would say yes.
No, I would say, well, if I had read the character correctly, I wouldn't have gotten out, right?
All right.
So I think
I'll give that to you. All right. Point of entry, absolutely yes. Stop loss, yes. Add-ons, we didn't have any add-ons. And then exit, absolutely no. Correct?
Correct.
Okay. So we have how many? 6. Okay. So we are at 67% on the variance. Okay. So what do you think your lessons here, and what kind of rules could we extract from those lessons?
I really like your rule about not getting off, not taking the whole position off if I see something that I'm reacting to emotionally. And actually, we did an AOT a couple months ago on another stock, Revolve, where I sort of did the same thing, where it was a little bit different situation, but it was sort of the same.
Mm-hmm.
I'm afraid I've got this little bit of, I just don't want to go into a deficit because I'm not reading the chart pattern right. So I think taking half a position off if I get spooked.
Mm-hmm.
Ideally I wouldn't take anything off. I just observe my original rules.
But you could allow yourself to feel emotionally better.
Mm-hmm.
And that's what would keep you in this position. So yes, okay. What else?
Well, secondly, when it started to move according to kind of my expectations,
Mm-hmm.
I didn't re-enter. And that's just, withdrawing from, it's kind of what it is psychologically, I think, is hanging my hat on my last decision and, having to prove to myself that I'm right about that decision. And it's not about being right about being wrong. It's about, just correctly letting the market tell me.
Yeah, and this is a very common mistake for all of us, traders and investors. Whenever we have a mistake like this, it has emotional weight and it starts to dominate the next actions that we have in the marketplace. And usually, predominantly, especially, if we're still training ourselves to be mentally kind of like strong in our execution and our trade management, we usually withdraw from the trade. And it doesn't necessarily mean that you're the beginner or you're, intermediate trader. You could do this on the advanced level as well. And I'm sure those of you who are more advanced traders, you have this type of trades too. I have those type of mental withdrawals from the certain positions as well. And usually on the advanced level, it happens because maybe you are tired. Maybe something is going on in your life and you're just distracted. But this is a typical mistake, and you have to think through this. You have to contemplate about this and create some kind of mental and both mechanical algorithm as to how you're going to deal with this. And Franz is giving you this solution. Re-enter the trade on confirmation of a regional analysis. So you might have closed this position. Yes. And that was the mistake. But the other mistake that follows is not looking at this chart. And we usually try to withdraw emotionally and forget about this position because there is pain that we associated with this particular stock. We'd rather go to somewhere else and not to deal with the pain. That's the biggest mistake. So re-entering on the confirmation of the original analysis means that you will still have to follow the stock after you exit. And once you see that, no, the original analysis was correct, I just acted more emotionally at that spot, so I need to regroup myself and to re-enter. And believe me, once you do this once, twice, 3 times, you will feel so much more confident about this type of spots where you exit and then you need to re-enter. And Franz, I think that you are on this path of working this through. It's all of us kind of like go through this processes where we recognize, we become aware of the mistake, and this is what anatomy of the trade is all about. And for those of you who are listening, and I know that some of you are listening and watching these recordings religiously, because there is kind of like such a dissection of the trade management that we do with our trades. You have to, come back and create this type of algorithm where in this type of the situations, you'll do this multiple times and then there is a switch. There is no just awareness, but now there is awareness and execution. And then the next step, Franz, obviously is going to be, stay in this position until a more pronounced change of behavior comes and, you see that you're wrong. But other than this, I'm impressed with the selection. I'm impressed with the point of entry. I'm liking the stop loss. And I'm liking also the awareness of the mistake. So kudos to you for all of this. And definitely this is a progress.
Well, thanks, Ramon. And I do have open positions right now. I've got about 9 of them that, I try to transfer my learning what not to do to learning what to do. So I do have a number of positions that, are working nicely, and that, I have taken the lesson of this trade and others where I've sort of repeated the same mistake and, tried to build up a rules-based approach that helps to mitigate my known tendencies.
All right. Well, with that, thank you so much, guys, for watching. And as usual, if you have any questions, if you have any trades that you want to discuss, and usually we do those in classes more, so here we're bringing more of our trades. But if you want to do that, send us your emails to wyckoff@gmail.com. Franz, thank you so much.
Thank you, Ramon.